Welcome to the Trader's Mind Chat Show. I'm Mike Lamott, and today's episode is a little bit different. I'm not talking about setups or entries or what the market's going to do today. I'm going to walk you through something that I did yesterday that brought me more clarity than any chart by itself ever could. With the market grinding higher, but my results not matching the tape, I took a day to pause. No trades yesterday. The market was closed. No screens. Just me and my trading business plan and a clean desk. This right here, this is my trading operating system. I went through the whole thing line by line, and I made many real updates. Tactical ones, mindset ones, faith ones. What came out wasn't just a cleaner document. It was a deeper commitment. So today, what I want to do is walk you through the 5 core systems that I clarified and how they can help you run your trading like a true business. So before we get started, let me know if you have a written plan or you're actively reviewing one. Drop a yes into the comments or a working on it into the chat. Okay, so let's hop into it. This system here, entry clarity system, the model book. All right, so let's flip over to the model book. The model book section. This is where the answers to some of the most important questions in trading. This helps me answer what's actually tradable for me, not just what happens to be moving on the day or what's trending on StockTwits. It's what's in alignment with my edge. My model book is where I store every setup that I trade. Pullbacks, VCPs, flat bases, high type flags, all of them with visual examples, structures, rules, volume patterns, relative strength expectations. Every potential trade gets a score. A, B, if it's tradable, or C, even if it's good on the surface. This helps me do a couple of things. It helps me to filter out all the noise, so that way I'm not guessing or taking random trades. It tightens my focus, so I'm focused on the best of the best setups, and it keeps me from style drifting when the market starts to throw curveballs. If it's not in this book, then it's not in the account. Here is a sample of one of the models in the model book. This is a VCP. I annotated this chart. This was a trade that I actually had taken a while back. And this one fits all the criteria that I look for in a VCP. Tightening action over several weeks. In this case, it was about 2 months worth of data. Then tightness along the 21 and 10-day exponential moving average. Dry up in volume. Relative strength line near its highs before price actually breaks out. Stochastics turning up. And then when price does break out, notice that it does pull back, but it holds the pivot, and it also holds key moving averages, specifically in this case, the 21-day exponential moving average. And it does so on a closing basis. It wasn't until about 2.5 weeks in that we get this last shakeout, and then price vaults. Here's Here's another one. Nvidia, very similar kind of action. Price tightens up over time. This one contracting for a couple of months as well. Pulls back to the 50-day moving average and then finally breaks out. Has a nice tight entry. Has multiple moving averages supporting the recent lows. Relative strength line into highs ahead of the price action. And then heavy duty volume on the breakout. It never looks back. This is what I want to see. Not every trade that I put on, not every VCP that I buy will necessarily do all this, but it's important to have the model so that way I know, is it acting right before I buy? Is it acting right after I buy? And it helps to keep me aligned. On to the risk tier system. So let me turn over here to section 6. So this system here, this is how I control risk. It's how I know how hard to press or when not to press. It's all based on market health, whether it's a green condition, a yellow condition, or a red condition. In green conditions, it means that everything is aligned. The trends are there. The stocks are setting up. It's all good to go. Yellow, we're getting mixed signals. Red is degradation. Each color that I trade with also comes with maximum percentage to risk per trade. So I'm always in alignment with the market. In a green condition, for example, I'm willing to scale up to where I'm risking about 1.5, so in some cases, even up to 2% of capital being at risk per trade. In a yellow condition, I'm capping it at 1%. Mixed signals, I don't want to start to scale up, but I want to be available for when the market does ramp back up. If we're in that red zone where the market's degrading, then that's where I want to have my smallest sizes, and my risk is only going to be 0.5% of capital or less, or I might pause and sit in cash. It also dictates the overall sizing of the trade, right? Not just how much capital is at risk, but how big the position is. In green conditions, I'm willing to go up to 25% capital allocation in the A plus setups that I find. In yellow conditions, moderate sizing. For me, that's 12.5%. In the red zone, 6.5%, that's starter size. And when I start to snowball and get a few wins in a row, then that's my trigger to begin to size up. It's not an emotional decision. All this stuff is mechanical. It takes a lot of the confusion out of the equation. The market tells me how hard to push. Risk in this way is a dial. It's not a switch. The system makes sure I don't overcommit when conditions don't deserve it. As you guys have questions, if you have questions on anything, just go ahead, type into the chat. I'm glancing up at the chat as we go along. Let's talk about the equity curve feedback loop, which is in section 8 of this. This is a very important one. This is one that a lot of people avoid. They either avoid section 8 or the equity curve feedback loop, or they stare at it way too much. Well, we need to find a happy medium. It's actually huge, of huge importance. And the reason why is because our equity curve is more than a performance tracker. It's really a mirror. It's a coaching tool. It's something that if we use it well, can help us to make sure that we stay on track, stay at equity curve highs, that we can adjust if things do go off the rails. So every day, I log P&L, risk size, setups, emotional notes. If the equity curve flattens or if it dips, I follow a 4-step protocol. This is all in the plan. Number one, if I have a 3% drawdown from the equity curve highs, then it's time to begin cutting risk. If I have a 6% drawdown off of equity curve highs, then it's time to pause trading. If I have an 8% drawdown off of those equity curve highs, then it's time to do a strategy audit. And if I have a 10% drawdown, then it's time for a full reset. Base sizing only, and then rebuilding confidence with small wins. Now, it's important to think through these drawdown scenarios, even if they've never happened before. The reason why is because if we can think this way and to think risk first and to plan ahead, then if things should really hit the fan, then, well, we are well prepared. We're not caught off guard. We're not scrambling. We're not emotional. We've already thought through. We might feel a little bit off if this is happening, but we're able to go back and reference right where it is in the plan and know exactly what to do. I also have a personal red condition protocol where if I'm on tilt, even when the markets are green, I'll reduce risk or even pause. What this system is letting me do, it's it's allowing me to step into data instead of reacting to data emotionally. Does that make sense? If you're not reviewing your equity curve weekly, I think that you're missing out on some of the best feedback that you can have. On to number 4, reset and re-engagement protocols. That's in section 6 as well. Re-engagement protocols here. So this is how I get back into rhythm after I've been off. Reset triggers include things like if I have 3 straight losses in a row, if I begin to have emotional fatigue or hesitation, if I feel the impulse to revenge trade or to deviate from the process, all these things, I'm not immune to any of this stuff. And that's why it's important to have it in our plans. And one of the things that I think that a lot of traders, especially if you're somebody that has experience, and I found myself falling into this kind of trap too, which is why I've outlined it in this plan, is that if you think that you're better or that you've made it or that you're above this, that's when we start to slip and start to fall. We could either humble ourselves or the market's going to do it for us. So it's much better to approach all this with humility. I use journaling and prayer to recenter. Then follow a 2-phase re-engagement. Phase 1, starter size only. That's where I'm putting on 6.5% capital allocations and risk is capped at 0.5%. And I only want to be taking A+ level setups only. Phase 2. Phase 2 is when normal size resumes, and it's only after I have 3 winning trades and or an upsloping equity curve again. We need a protocol to rebuild trust with ourselves, not just re-enter the market. And, well, especially if we're in that chop zone, this is one of the things that can really help to rebuild and restore confidence. And then when those bigger waves do come, well, where not just riding and hoping, but we're in there with confidence and we're able to compound. Lastly, number 5, psychological and spiritual compass. This is in section 7 right here. Now, this is really the root of the system for everything else. My faith informs how I show up, not just in life, but in trading as well. Every day, right? And this is my personal plan. So I'll share this with you. Every day begins with scripture, prayer, and a reminder that I'm not here to control, not here to control anything really. I'm here to be a steward. So when pride creeps in, my aim is to go to humility. If I'm chasing, I want to return to patience. I've even built in the Beatitudes to have based reset cues in my trading plan. I don't believe that you can separate mindset from results, and I definitely don't believe that you can separate identity from action. What I want to do is trade to serve, not to try to prove something, and it's to serve a higher purpose. It's not to try to serve even clients, right? So I'm sure that there's at least a few of you accelerator members or research program members that are here. Well, when I'm trying to trade, I'm not trying to serve you guys. I'm trying to serve the Lord, and the way that I'm going to do that is by not trying to prove something. And that it's a slippery slope that I've fallen into the past, and I'm trying my hardest to not backslide. And that's what this plan is going to hopefully help me do. If I'm trying to find trades just to attempt to serve clients or to post on social media, that's not going to serve anyone. What's going to truly serve is observing what the market is providing, looking at it through the lens of what's in this this model book, this model book section. Is it there? Yes. If it's no, then it's not about proving anything. It's about sitting on my hands and waiting. This is the shift that I feel really changes everything. Everything that we just walked through today, these 5 systems, and plus a lot more in this trading business plan. This is my full playbook. It's all in the trading plan that I rebuilt this week. Now, if you're somebody that's already purchased the Trading Success Blueprint that teaches you how to write a trading business plan, and if you're somebody that's already purchased the add-on, which gave you my old trading business plan, I'm going to send you this updated plan for free. It's far more detailed. You saw the tip of the iceberg during this show. You're going to get the whole thing for free. I'm going to be sending it out later today. If you're someone that is interested in getting this full plan or getting the Trading Success Blueprint, then you will also be getting this sent to you for free. So let me put the link into the chat. It's also on my website in my bio, depending on where you're watching this. You could go get it at marawolf.com /blueprint. If you have any questions on any of that, please type into the chat and let me know. But here's where most traders get stuck. Most traders get stuck not because they're lazy, not because they're undisciplined. I think that if those thoughts are popping into our heads, that it could point to a form of spiritual warfare. Most of the traders that I've met have been exceptionally hard workers. If you're somebody that has spoken to me already through DMs, or somebody that I've had a one-on-one session with, you're already done the work. I haven't met anybody like that's reached out that is not seriously grinding hard. So it's not about being lazy. But many of us have those thoughts. And those thoughts are untrue. The real reason why most traders are staying stuck is because they don't have a plan. They don't have a plan, or they don't have a plan that's fully written out, detailed. It's not where you need to come up with a 50-page plan or anything like that, but you do need clarity. Writing all this stuff out yields clarity. Having a structured plan yields clarity. Knowing what sections that you should be thinking in and thinking through adds clarity. If there's one thing that I hope that you take away from today, it's this. Success is not about being perfect. It's about building structure that helps you bounce back and bounce back fast. Right? It's just like that old Rocky quote. It's not how many times you get hit. It's about how many times you can get hit and keep getting up, keep moving forward. Here's my closing remark. Pick one of the 5 systems that we shared today and build it into your process. Build it into your process this weekend. Take this weekend, pick one of them, build it into your process. Again, those 5 were entry clarity, around systems, having your model book, having a risk tier system. You could go green, yellow, or red, like how I did. Have an equity curve feedback loop, reset and re-engagement protocol, and having a spiritual and psychological compass. And if you want help with any of this, please reach out. That's what I'm here for. That's what this community is here for. So until next time, I hope that you have a wonderful weekend, and take care. Much love. And as always, God bless. Hey, thanks so much for sticking around to the end. If you're new here, hit the subscribe button down below and become a part of the Marrow Wealth community. And make sure that you check out some of the other videos on the channel. They're exactly what you need to see. And leave a comment down below. I read all of them. Leave a comment.